Good morning, everyone. Steve here from theturtlefollower.com, and in this video we're going to take a look at the major indices futures contracts and see if we can kind of get an idea of maybe where we may be headed for the upcoming week. Last 2 weeks have been quite interesting. Last week rallied almost every day, closing higher on the week, right back at resistance. And then we followed that up this week with closing lower 3 out of the 5 days, including Friday's big sell-off. But again, bringing us right into support. So you could see here on the ES, the futures contract that we look at for the S&P 500, that we're right back at a level that we would expect to see a bounce. Okay, 2075 acted as some support. If you extend it back further, acted as some support really throughout the middle of the year, from really April until June. And then this small little blip below that level acted as resistance. Okay, you could see that right here. So here's all the support. You can see all the tails below that level. And then again, here is the resistance where you have this consolidation below that level. So now here we are, came right back into 2076, 2075 on the ES contract, trade as low as almost 2069. The actual low was 2069.75. So again, I would expect to see some sort of bounce early in the week to at least re-establish this support level. Something else that people tend to look at, I don't look at it very much, but it's one other thing people look at is called a fib retracement, and they like to look at that 61.8% fib retracement. It's hard to see here, but that is this line right here, and you can see that that is identified at 2069.14. So basically what that says is 61.8% of the rally that we had was retraced. Okay, so that 61.8 brings you to 2069, 17, 15, and that basically marks from the low to the high, and then it draws the lines in for you. So that's something else that kind of coincided right with the lows today. So it was almost to a T that we got that move exactly to that level, and then again, like I said, we bounced towards the end of the day and a little bit into the after-hours session, closing the week down on the S&P 500 futures, down on all the futures actually, but again, right into a key support area. So again, if this is going to just be a little bit of a pullback that we were looking for last week, this is where you would want to see the bounce and maybe a return back to the 2100 or somewhere in that area. But I think here we have to consolidate in this range and then eventually break out. My concern now, if you start looking at the weekly chart, is we had this nice bounce off the bottom of the consolidation. We're giving a lot of that back, but we did not break the lows, the weekly lows. My one concern is that we just consolidate so much and then eventually start to kind of pour out the right side, almost as if it was a little bit of a box here. Pour out the right side and then start making a series of lower highs and lower lows. So to wrap up the ES, definitely looking for a bounce early in the week, and then we'll see where it takes us. But I have to believe with how the ES trades and how much support is at this 2075 level, I would be quite surprised if we did not see a bounce on Monday or Tuesday. Now the NQs were acting very well last week. Okay, they broke out to new highs, and sure enough, here we are, pulled right back. And right where did we pull back to? We pulled back to the previous resistance, which becomes new support. Okay, so think of it as a test of this level. All right, so a lot of times what happens, you get a move, you break out, all right, as we did here, and then you retest the top side, and then you turn around and start moving higher. That's what this looks like to me. Okay, and again, if we look at that fib retracement, you can see almost to a T this 38.2 fib retracement. All right, so again, from the lows to the highs, it almost perfectly coincides. So a lot of the ones are 38.2, 61.8, and the 50%. But I think I'll be perfectly honest with you, I don't use fib retracements, but from my understanding, the 38.2 and the 61.8 are really the ones that are more important. Okay, then you have the 50% one that's kind of there, but not necessarily one that anybody, I think, trades off of. But either way, it's funny when you start to do this technical analysis and you look at these fib retracements and everything like that, how almost perfectly things basically line up with a lot of different levels. Okay, so here you are, breaking out, coming back, retesting. Again, this tells me now that it's very, very possible, now that the S&P is at a good level to bounce, the NASDAQ is at a good level to bounce, if the bulls are going to take control, we should bounce on Monday. Okay, and again, looking at the weekly chart, nice breakout here. All right, again, we didn't take out the lows. We barely pulled back halfway into this big bar. All right, so again, I think if the bulls want to take control of this, they can. They're at a good level to do so, and they need to do it early in the week. Okay, they have to take over Monday. We have to have a nice big green bar on Monday to reestablish these levels, and then see where they can take it for the rest of the week. The Dow. All right, Dow, not as good. All right, Dow looks like maybe it wants to break down, but again, look at where we came into this week. We've talked about it many times. Sure enough, we had this level broken back here in the beginning of July. Had that move up, hit that 18,096, all right, 18,100, pulled right back to 17,530. That level coincides again with some support that went all the way back to March and April. Sure enough, we saw that same support try and hold here in June. All right, but when we did hit it, we got a bounce. When we hit it, we got a bounce. When we hit it, we got a bounce. Hit it, we got a bounce. Okay, so again, this 17,500 level is important. Sure enough, again, kind of dipped down below it a little bit and ended up holding it for the week. But here's kind of the scenario that I'm worried that may be happening with the S&P. As you can see, the longer we go sideways, now we're starting to get this small downward pitch. All right, we're not able to get back to the highs. All right, and now maybe we're going to start putting in a small channel moving to the downside. But here again, Dow lining up exactly with what we talked about in the S&P and the NASDAQ. Now the Dow obviously is not as strong as either of those because it's basically back at the lows, but the fact is it is at a key support level. Okay, this level did hold every day except the 8th and the 9th of July. Okay, and what that tells me is this level really needs to hold, and if it doesn't hold, well, then we may go down to the 17,350 or even down here to 17,000. But from what I've seen in the past and the way everything is lining up at this point with the Dow, the NASDAQ, the S&P, all right, you start to kind of compile all these together. Now it's starting to look like we have a good chance of a rally, or not necessarily a rally, but some type of bounce early in the week. All right, now here's the Russell. Okay, you can look at the Russell a couple different ways. There's a trend line there. There's a trend line there. Okay, either way, we're at a support level. Okay, so looking at the weekly, sitting right on almost the 200-day moving average, right at support of this consolidation, right, 1214. Okay, so while we are putting in a lower high, I do believe again that we have everything in place for at least a bounce in the Russell. Okay, so again, kind of starting to stack all these on top of each other. You get one that looks like maybe it's going to bounce, then you know what, you got something. You get a couple of them, then you know what, you got a little bit more of a better case for this bounce to actually happen. So again, I think ultimate support here is 1205. You can see that was tested twice, once here back on 3.9 and once here on 5.7. The one thing that you do notice is when those were tested, it led to significant rallies. Okay, tested, rally, tested, rally. Okay, now we're putting in, although it is a lower high, we're also putting in a lower low. Okay, so here's that lower low, and here are these higher lows. Okay, higher low, higher low, higher low, higher low, higher low, and maybe potentially even or a little bit of a higher low. But with all of the selling that's happened this week and how quickly we've come down, I mean, look at the S&P. We really sold off. I think it was about 100 points from the highs to lows. No, I'm sorry, it was 50 points. 2125 to 2075. Okay, 50 points in the S&P in a matter of really 3 trading days. We had 2 that were sideways and 3 down days. Okay, so not saying that we're oversold by any stretch of the imagination, but understand again that when we look at these, you can see that there is a potential for a significant bounce, especially when you line up the other market indices. The other thing you can look at here on the S&P is this nice trend line that's starting to develop, okay, where we've had connected the lows from back here in the beginning of the year, and then again the low from just recently on 7/7. So this does show we have some maybe downside to go, but again, I think with everything going on, what I'm looking for next week with the way everything is shaping up, I would say we probably bounce Monday, maybe Tuesday. I would say if we bounce Monday and can't hold it, it's probably a good indication that we head lower. But for right now, all intents and purposes, everything I'm looking at here tells me that we should bounce, at least hold or bounce a little bit and establish these levels once again. 2076 in the S&P should hold. The NASDAQ, the recent breakout. Oh, wrong one. /NQ, not just NQ. The recent breakout level of 45.46 should hold. Okay. In the NASDAQ, the Dow, previous lows right here of 17,500 should hold. And the Russell, okay, this low right in here, around 1215 or so, should really be the support. So that's what I'm looking at going forward. Again, take it one step at a time. Understand, yes, today was a rough day. Okay, my portfolio had a rough day. The model portfolio, not so bad. Ultimately, though, you kind of have to gauge your expectations. That's what we do this for. And understand that right now, everything is not positioned, for a breakout. But understand that we're also not really positioned for this huge market pullback. All right. So right now, until those levels start to break, I have to believe this, sideways to higher for next week. So that's it for today. Any other questions, please leave them in the comment section below. If this is the first time joining us, please head on over to the website, sign up for the nightly recap, and you'll get all these future videos sent directly to your inbox. Have a great rest of the weekend, and we'll catch you on Monday.